Have you ever heard that phrase, become a millionaire by investing in the stock market by 2025?
Oh, yeah.
It sounds kind of like some complicated game,
Yeah.
only for the pros. But what if I told you the path isn't as complex as it seems?
Okay.
Like, it takes work, don't get me wrong, but the ideas themselves are pretty straightforward.
Hmm.
And that's what we're diving into today.
I'm interested.
We've got this source, Tex Colley, that makes this exact argument.
Okay.
Think of it like losing weight. Everyone knows the basic advice. Eat well, exercise, get enough sleep.
Right.
Simple enough, right?
Sure.
The hard part is actually doing it consistently.
Yeah, definitely. It's the consistency. That's the real challenge.
Exactly. And Tex Colley argues that building wealth in the stock market is kind of similar.
Interesting.
It's not about some secret formula, but about consistently applying these fundamental principles
Made sense.
and maybe even more importantly, managing your emotions.
Oh, emotions play a huge role. Definitely.
So today, we're going to really dig into Tex Colley.
Awesome.
We'll pull out those core principles, the stuff this source believes is essential for long-term success,
Right.
and hopefully help you make sense of all the noise in the financial world.
It can be overwhelming, that's for sure.
Okay, so Tex Colley starts by tackling this question.
Uh-huh.
Why do so many people struggle with investing?
Right, because the stock market as a whole, you'd think.
You'd think it does pretty well over time.
Yeah, historically it has.
You look at something like the S&P 500.
Uh-huh.
It's had pretty solid returns on average. Tex Colley says around 10% annually.
Which isn't bad, right?
Not bad at all.
Yeah.
But the source points a finger at financial media.
Ah, interesting.
They say all that focus on grabbing headlines and creating drama, it can really lead investors astray.
Oh, yeah, I see that.
What do you think about that?
Well, I think the source makes a good point. This constant stream of news and analysis, it's all focused on those short-term ups and downs.
Yeah.
And it can really mess with our emotions as investors.
Absolutely.
We start feeling fear and greed.
Right.
And that leads to decisions that aren't based on a solid long-term strategy.
Yeah, you're not thinking straight.
Not at all. And that statistic Tex Colley cites, the one about the majority of individual investors underperforming the market.
Yeah.
It really highlights this problem.
It makes you think maybe the biggest obstacle isn't the market itself. It's us.
Our own behavior.
Our reactions. So if all this media hype and our own emotions are holding us back,
Which it sounds like they are.
what does Tex Colley suggest we do instead?
Well, they introduce this idea of a contrarian strategy,
Okay.
which basically means the real opportunities come when everyone else is freaking out.
During those market downturns.
Exactly.
Okay.
Because when there's widespread fear and uncertainty, that's when you can find good assets at lower prices.
Buy low, sell high.
Precisely. It's that classic investment principle, but it's so hard to actually do when everyone's panicking.
Makes sense. And Tex Colley gives us some specific examples to illustrate this.
Oh, that's helpful.
Yeah. They mention buying stocks like Palantir or Microsoft or even the whole S&P 500 during that market dip back in 2022.
I remember that dip.
Yeah, and the source suggests those could be strategies that lead to big returns over time.
It's interesting, right? Because they're talking about established companies or a diversified index,
Yeah.
not some risky fly-by-night operation.
Right, there's value there even when the market doesn't see it.
Exactly. It's about looking for quality when the prices are temporarily down.
Okay, now Tex Colley also talks about this common mistake investors make.
Let me guess. Trying to time the market,
You got it. Waiting for that perfect moment to jump in.
which, as we all know, is pretty much impossible.
The source is very clear about that. Trying to consistently and accurately time the market.
Yeah.
It's like mission impossible.
For most people, yeah. And the data they present about missing the best market days,
Yeah.
it really drives this point home.
Yeah, it's kind of scary, actually. Tex Colley says, if you miss just the 10 best days in the market over 20 years,
Just 10 days?
just 10, your returns could be cut in half.
Wow.
And if you miss the top 40 days,
Oh, man.
your portfolio could end up 19% lower.
That's a huge difference.
All because you missed a handful of days.
And here's the thing. Those best days often happen right around or even during crises.
When everyone wants to sell,
Exactly. It's when the urge to get out of the market is the strongest.
which makes it even harder to do the right thing.
It really does. But it reinforces how important it is to stay invested
Through thick and thin.
through all the ups and downs.
So Tex Colley's basically saying, forget about trying to predict the market.
Yeah.
Don't try to be a fortune teller.
Right.
Just
Yeah.
stay invested.
Ride it out, even when things look scary.
Exactly. And to help us do that, they give us some key principles for a solid strategy.
Okay, I like that.
The first one is plan ahead.
Have a plan. Makes
And
sense.
don't wait until the market goes crazy.
Right.
Decide how and when you're going to invest before things get turbulent.
So you're not reacting emotionally in the heat of the moment.
Right, you've got a plan.
Love it. What's the second principle?
A solid emergency fund.
That's crucial.
Tex Colley says have enough cash to cover at least 6 months of your expenses.
So you're not scrambling if something unexpected happens.
Exactly. If you've got that safety net, you're way less likely to sell your investments at the worst possible time.
Yeah, when the market's down. You don't want to be forced to sell then.
Okay, principle number 3, regular investing.
That's the one they call dollar cost averaging, right?
Yeah. Basically, you invest a fixed amount of money at regular intervals.
Like every month.
Exactly. It doesn't matter what the market's doing. You just keep investing consistently.
Okay.
And Tex Colley even suggests upping your investment when the market takes a big dip.
Really?
Yeah, so you buy more shares when they're cheaper.
Interesting.
That way, when the market recovers, you're set up for even bigger gains.
I like that.
The fourth principle is diversification.
Don't put all your eggs in one basket.
Exactly. Tex Colley specifically recommends broad market index funds, like the S&P 500.
Yeah, those are good for spreading out your risk.
They automatically diversify across all these different companies.
So if one company does poorly, it doesn't tank your entire portfolio.
Right. Diversification is key for managing risk. And the fifth and final principle is to ignore the media noise.
Oh, that's a tough one. Especially nowadays with all the information flying around.
It is tough. But Texacola says stay informed about the overall economy. That's fine.
Yeah.
But don't let those sensational headlines and short-term forecasts control your decisions.
It's about keeping that long-term perspective.
Yep. Don't get caught up in the hype or the fear.
Right. It all comes back to emotional control, like we talked about at the beginning.
It really does. Now, Tex Colley also looks back at history, to give us some context.
Always good to learn from the past.
They point out this consistent pattern. Markets go down, but they always recover.
Okay.
They say the average bear market lasts about 10 months.
Which feels like forever when you're in it.
Totally. But then the average bull market,
The good times.
yeah, that lasts around 5 years.
So much longer.
And get this. According to Tex Colley, the S&P 500 has recovered from every single crisis it's ever faced.
Every single
Every single one.
Yeah.
It's pretty reassuring, actually.
It does make you feel a bit better about the inevitable downturns.
Okay, so let's sum up Tex Colley's main argument. Becoming a millionaire by 2025, it's a big goal.
It is.
But it's not some impossible dream reserved for, Wall Street geniuses.
Right.
It comes down to understanding these basic principles.
Uh-huh.
Investing in good companies, especially when everyone else is selling,
Yep.
and then just staying invested for the long haul.
Simple, but not easy.
Exactly. The source says this path is open to anyone who gets that.
Anyone who's willing to put in the work and stay disciplined.
And, maybe even more importantly, anyone who can control their emotions.
Emotions can really sabotage your best intentions.
All right, let's do a quick recap of the key takeaways for our listeners.
Sounds good.
We started with why so many investors struggle.
The emotional roller coaster and the media hype.
Yep. Then we talked about this contrarian approach.
Seeing market downturns as opportunities.
Right, buying when everyone else is selling. And we talked about how important it is to stay invested.
Through all the ups and downs.
Don't try to time the market.
Just write it out.
Exactly. And finally, those 5 principles for a solid long-term strategy.
Plan ahead, have that emergency fund, regular investing, diversification, and ignore the noise.
It's all about playing the long game. So as you think about all this, here's something to consider.
Okay.
The market has always recovered in the past, right?
Historically, yes.
So what's one small step you can take today, even if becoming a millionaire by 2025 isn't your main goal?
A small step towards financial freedom.
Exactly. Because even if you don't hit that millionaire mark, these principles can still help you build wealth over time.
It's about making those small, consistent choices.
And remembering, investing can be simple, but staying disciplined.
That's the real challenge.
And the potential rewards are huge.
Absolutely.
So think about that, and we'll see you next time.
Sounds good.